Hi, this is Alex from the Millennial Entrepreneur. I'm here with one of my good friends, Keegan. She's been in the banking industry for about 7 years now. She was an underwriter for 5 years and has been on the banking side for 2 years. So hi, Keegan. Awesome to have you here.
Hey, Alex. Thanks for having me.
Yeah, absolutely. So if you could just let us know a bit about your background. You had said you had worked with portfolios that are about 5 million to 75 million. Could you just tell us or flesh that out or tell us a little bit more about it?
Yeah, sure. So I work for BB&T, now Truist, which is a bank that's headquartered in Charlotte, North Carolina. Worked for the same company since I was out of school, so that's going on 7 years now. And I'm in the commercial bank, and that means we help out businesses that typically have revenues anywhere from 5 to 75 million. And as Alex mentioned, I was on the portfolio side of things, so really crunching the numbers. And then more recently, I have expanded my role and really become more client-facing, and going out and meeting directly with the business owners and CFOs. And obviously entrepreneurs, which is why I'm so happy to be here.
And we're happy to have you, Keegan. So let's start off. Let's say I have a company. Let's say, just because it's some things I'm familiar with, but let's say I have a CBD company and I'm on the retail side and I sell products to, say most of my products are in a small mom and pop shop. I have an e-commerce site and I have some products in Whole Foods maybe. And let's say I do about 6 million in revenue. What would you say kind of from, and I'm looking for money to grow, but what would you say the risk profile could potentially be with that type of industry? What could be some of the metrics you're going to be looking for from me? Kind of walk me through the initial process.
Okay, so just first off, love to hear that, if an entrepreneur came that way, it's in a newer industry that is, just going to be honest, a little new to bankers. And so you probably would have to explain to them what types of products, if they were, let's say, cream-based CBD products, or if they were tinctures or in pill form, stuff like that. But the greatest thing would be that you have already kind of sustained that platform and offering in a mom and pop e-commerce and Whole Foods. So typically a banker would like to see at least 2 to 3 years of kind of that stabilized performance. And this is speaking with a conventional loan. Right. So there are SBA type products that could help, but this is a conventional loan. So in terms of, you said like the risk profile, one would hope that the amount of debt, so let me go back. So you have revenues of about 6 million, and then you have to, pay yourself, pay your people, pay for the packaging, the raw materials. And at the end of the day, hopefully you have a net profit or a net income. And so what that allows for is you to go out and get debt that would help you grow maybe at a quicker pace than just if you were to use your cash flow and reinvest back in the business. So I think that those would be kind of the foundational things to think about. Yeah. I can get more in depth. I don't want to bore you too much.
No, you're fine. It's very interesting for me to understand your side of it, looking from maybe someone on the other side of the fence many times, where someone on the entrepreneur side can be afraid of banks. Maybe they don't understand what they're looking for. Maybe many times entrepreneurs, like you mentioned before, want to grow too quickly or grow outside of their means to an extent and overextend. And like you said, don't have any, what was it, gunpowder in the barn, I think you had said.
Yes.
But just more, more cash on hand. So if you have some rainy days, you can make a good decision from it, or you could come out of it positive or okay.
Right.
So as far as uh, your expenses, like something I've wondered if, so in our industry on the CBD side, you have manufacturers that produce raw goods, and it's very capital intensive on the front end. So what happens is you come in, you take 1 to 5 million, maybe you buy extraction equipment, you buy all of these processing equipments, distillation units, and then of course the building and getting that permitted. And you can see all of the value there. Like it has a physical number to it. It's an asset. So, then you go towards a brand, and a brand is all marketing. It's all, brand worth, like if you said to me, I'm looking at a Nike, or I'm looking at, a mom and pop brand, that the worth of the brand isn't really real there, in a sense. And I would just like to see from your perspective, like if you were going to loan either one money, the things you would look at, like, is there a numerical value for a brand? Like, can you attach a number to what you believe that brand is worth? And then like the CBD extraction equipment, it's fairly niche, like maybe another CBD extractor would buy it, but even if it's worth $200,000, is that a real number to a bank? Because a bank would probably just fire sell it if it ever had to.
Right. So I guess, okay, so from what I'm hearing in this industry, the most valuable thing is the inventory that you have. And
Yeah.
it sounds like you would have some capital assets, you would have some equipment that also would be worth some value.
Mm-hmm.
So when it comes to looking at a balance sheet of a typical CBD company, you would probably see typically, so if your equipment is worth about 200,000, I don't know how much inventory one would have at a time, but one thing that I'm sure you've seen is you don't ever want to get caught with too much inventory on your hands.
Yeah, that's
Because
we've seen that. You get, say it's like $1 million in equipment and maybe 100,000 in inventory at a time. And if you kick up your inventory 200,000 and you can't move it, you're just paying for a lot of overhead with no real revenue coming in. That's
right.
Yeah.
So in terms of a value type of thing, the equipment sounds like it would be the most valuable because it would be tough, especially you talked about the brand. So if there were branded packaging on the CBD products, then it could only potentially be sold in certain markets maybe, or in certain stores. So one thing that I think is fascinating, and I'm not sure if the CBD market has thought about this at all, is the type of company that would provide private label services.
Yeah,
so that would mean, let's
couple.
say, I think that would be kind of cool, but it goes back to the idea that inventory can pivot, the equipment can pivot and make not just, let's say Bob CBD, but it also could do like Sally CBD.
Yeah. Some of the more higher quality. That's what I've just on the CBD side, I try and compare it to like real industries. Like say you go to Kroger and there's a tomato paste on the shelf, and say there's 4 brands of tomato paste. I found out that if for raw ingredients like that, there's really only a couple manufacturers in the United States. and they'll take
Mm-hmm.
in a set of tomatoes, and they'll grade the output as, like, say grade 1 is the highest, 2 and 3. And then brands like those 4 brands that you saw will just go to the manufacturer and buy quality 1 through 3, slap a label on it, and then just put it on a shelf. And that's really the only touching that the brand has, which is
Right.
it's a very interesting market than what a lot of people try and do in our world. They try and do it themselves, which is not always the best quality.
Gotcha. Yeah.
Yeah. So let's say you're evaluating a new company that wants to work with your bank. What would be the major or key elements you're looking for in that company on your first meeting with them?
Okay. Yeah. So we let me see. We like to call these the like 5 C's of credit, and I know it's going to be
No, I'm
kind of
honestly,
cheesy, but
I love it. That's, yeah.
so we can just dive right into these. But the first one is character. And what that comes down to is you and I mean, I'll just be honest, sometimes you meet with people and you don't get a good feeling. But beyond that, obviously it's a very regulated industry. So we pull a background report, we pull your credit report. So things like that attest to someone's character. So that would be the first C. The second C would be cash flow. So we look to, one would hope that the revenue you're bringing in, and after you pay all the expenses, that you still have some cash flow left at the end of the day. And then the next C would be collateral. So typically a bank would want to see some sort of asset like a real estate building or equipment or, bigger, you mentioned like Nike, that would be, they could potentially use their brand as collateral, but that's really only when you get to the much higher base. And then we have capacity, which basically says, so Alex, if I gave you a loan for $100 million to help out your business because you wanted to provide more orders to Whole Foods, let's say.
Sure.
Do you have the workforce that you can go out and fully staff your manufacturing plant? It's like you'd have to staff it, 24/7. So that's a capacity issue. Is sometimes your dreams may not be able to be realistic. And then conditions. So conditions would be the type of idea that we think. So with all the tariffs with China, perhaps that those industries that were adversely impacted, maybe it wouldn't be a good idea right now to get heavily into that sort of industry. So just to kind of recap, the first thing is character. Next would be collateral and capacity, cash flow, and conditions. So that's kind of the easiest way. It's a little cheesy, but it makes it easier to remember.
The capacity piece is one thing that interested me. So in our industry, in the CBD world, it's not like, it isn't a well-defined industry. So like in a brewing industry or in a more well-defined industry, you may have, okay, this piece of equipment is known to output X, or this equipment, its physical capacity is this. But in equipment that a banker may not be as familiar with, how would you assess the capacity? Because if someone walked into our facility, I could say extractor can do 100,000 pounds of biomass in a week. And I could make that believable, you know? And so like, does the bank rely on consultants to come in and work with the company, someone that they trust to help evaluate it? Or is it like the banker is relying on the knowledge of the company to prove out that their equipment can actually do that?
Yeah, so let's see. Historical results are typically a good indication of future performance.
Mm.
And what that means is you obviously would be presenting your tax returns or your audited statements, reviewed, whatever they are, however you work with your accountant. And so let's say you had 10 employees year one, and then you had 20 employees year two.
Mm-hmm.
But you had the same machinery the whole time. Did you automatically like double your output with the same machinery?
Oh, yeah.
So I guess to kind of, the answer would be just really digging in and looking at the numbers and seeing the output as compared to the people would be the best way to kind of follow your story and your rationale for wanting to go out and, let's say, add more equipment or more people.
So you could take,
but that is,
yeah, you could take how many employees I had and how much equipment maybe I had, how many extractors I had versus how much throughput I actually had and how much material I was actually able to produce.
I mean, that would be one way to do a quick back of the napkin type of,
yeah.
Because you were saying how would someone walking in be able to kind of test if you were, I guess, just blowing smoke up there?
Yeah,
up there.
That's why.
You know what? Or
yeah, that's why I mentioned that, because I see it and have seen it in our industry for years. You know, people will have the "I'm going to be the next Coca-Cola" idea, and you know, they go in, they have a good idea, they make a good product, and then they say this is going to be a $40 billion industry. I'm going to have a large cut of that market share, and I need to have X capital to do so. And so they'll bring investors in or bring people in, and you know, they'll just kind of, this thing can do 100,000 pounds a week, and people put their money in. And I'm seeing a lot of people fall out. That's kind of one of the reasons I was asking, if someone is the technical operator, wants to lie to you, how would you know? You know what I mean? If they're telling the truth or not.
So that goes back to that first idea of character. I mean,
Mm-hmm.
when you pull their background report, do they have a long history of, let's say, skirting the law or having run-ins with the law that are unexplained things? Do they have open tax liens, or they refuse to, you know, pay their fair share of taxes? Those kind of things typically go hand in hand with someone who wants to embellish. But to, I guess, bring it back to more positive point of
Yeah.
maybe what I would recommend is, I'm a huge believer that confirmation bias is real. So the idea that, you know, I am going to be a leading market, I'm going to have a leading market share of a $40 billion company. Like, I believe in myself. And so then you look for things that confirm your beliefs.
Mm-hmm.
And so I think that you should try to surround yourself with trusted advisors, whether that's family members, or that's, you know, an attorney or someone else in the industry that acts as a mentor, or a CPA, or even a banker. But you do need to make sure that you're surrounding yourself with people that can say, I believe in you. However, have you thought about this? Or are you prepared if this happens? Because that really will make an entrepreneur sharper and better equipped for when crazy things happen.
No, it's totally true. Having, a strong mentor group, maybe one mentor or a couple mentors that you can look up to and have real honest conversations with, and it's a relationship where they're not afraid to tell you the truth, or, tell you that everything you hope it's going to be may not be in the near future. Could be at some point, but maybe taking some precautionary steps is a better idea than throwing caution to the
Yeah.
wind.
And I know that there are a lot of trade groups or professional networking groups that I think can be really valuable, where you can sit and talk with other entrepreneurs or business owners and say, even if it's just, look, I can't keep, a good workforce. Like, they would rather go collect unemployment than work for me.
Yeah.
And just kind of lamenting over those things together, and then, coming up with a strategy to fix it.
No, it's the creative solutions are normally the best solutions, or really can give you, like, working with a mentor, like you mentioned, or someone else that understands your situation, can kind of get you out of that slump, or maybe tell you that you need to offer maybe health benefits to try and keep someone invested in your company, or maybe if you offer some common stock to staff that are working, that can keep them, it's like, hey, if you work here for a year, you can have an opportunity for X stock, or maybe some long-term incentives to keep them could be a good option.
Yeah.
So what would you say is the market that interests you the most right now, that you see could be something very valuable, or something that you're just watching or has kind of piqued your interest?
Yeah. So this is kind of, just follow me here. So on the banking side, we also provide insurance products.
Mm-hmm.
And our CEO was talking about the idea that you always have to be disrupting the marketplace, or you're going to die, as bad as that sounds. So, for example, Kodak, they didn't really see the digital rise of photography, and the fact that we all have a phone on our, a camera in our pocket, and you can see what happened to them. So with insurance, one thing that our CEO commented about, which I thought was really fascinating, is he goes, I'm watching the trend of self-driving cars, because if people no longer have to drive cars, then are they going to need insurance? And that's a really big revenue stream for banks and for insurance companies. So just really always kind of thinking outside of the box, and entrepreneurs are much better than bankers at that. But to me personally, that is a fascinating market that I'm watching, and I think is cool, and seeing what Tesla's stock has done this year, and who really would have thought that?
Yeah.
So
do you think they're inflated at
Yeah.
all, or overvalued, or?
In my opinion, yes, because we haven't seen some of these big projects like the Tesla truck, or the idea that they're really going to expand their space program. We haven't really seen that come to fruition, but I think it's priced into the stock price already. And so I feel like there's a bit of a disconnect, but that's just my personal sense.
I agree. And it's, Tesla has always been extremely good at selling their ideas and getting people to believe in what they can do, and then many times delivering on it. And I think people are already trying to hedge their bets towards Tesla, and it has been awesome to watch them skyrocket this year. I wish I had gotten in a bit earlier. But,
don't we all?
Yeah, that's. I think I could say that just about every day. You watch it, and it's like, wow, they went up 15% overnight. I wish I had just
Right.
known that somehow.
Right. But then
But
even going back, I know California, I'm forgetting the year, but I know they passed a law saying that all new cars had to be electric by, I believe, 2024 or
yeah,
2028, something like
yeah.
that. But then I got thinking, well, what is that state going to do in regards to the already overburdened electrical grid? If they're mandating that all these cars have to be electric, how are they going to input the infrastructure? So really just all of that is so fascinating to me.
I think we should get into the business of laying the cable for that.
Yeah.
They'll probably get there
Sounds
and then
like it,
figure
right?
out they need it, and we'll be there with a bunch of cable.
Exactly.
That is an interesting point. I've seen, I guess Tesla. So I had gotten a Tesla a couple of months ago, and it's been a very interesting psychological journey just having one that I didn't expect. So like whenever I'm driving, if someone comes up and cuts you off, or someone races past you, or someone slams on their brakes, that can be like a frustrating moment, and maybe you want to get away from that
Right.
person. It's like I see that person as
Yeah.
risky. They're doing things that could get me into a wreck and cost me money. And whenever I'm in the Tesla, and it has like the autopilot, I just turn it on and let it go. And someone will race past me or cut me off or slam on my brakes, and I have no internal feeling. Like I have no one cut me off, no one brake checked me. They brake checked the car. And I trust
Oh.
that the car can handle it, so I'm not worried about it, which is a very
Yeah.
like, it's a very interesting psychological effect, because I just turn it on autopilot and I just watch. I literally just watch people drive by me and see someone fly up and drop back and do all sorts of stuff, and it's like, wow, humans are not good drivers. Like we are all
No.
we are all over the place. Like this is very confusing to watch.
Yes.
But I have seen, to your point on the insurance, I saw one thing that someone was talking about. If a Tesla is driving and it runs into another Tesla and they're both self-driving, like fully automated to that point, who is going to get sued for the cost? Or, who's going to pay for it? And they said that they were going to try and go back to the software engineers that made it.
Oh, wow.
Some people were going to try, or one of the ideas was to reach all the way through, because they're the person that made it. Like if someone is doing their job and they do a poor job, they could be let go from their company, or maybe something could happen. But for these software engineers, you don't see it until it's on the road and something happens.
Right.
So I think the self-driving car I agree. I think it's a very interesting market right now.
I agree. And I hope that's the future we're headed towards. How incredible would it be to remove some of that anger and emotion from drivers and make it a safer place to live?
Mm-hmm. No, it's absolutely true. And I've heard some people talk about how technology is going to take all of our jobs, and it's going to ruin the economy. But I listened to Tesla and one other person who are hugely into automation, or not Tesla, Elon Musk, but he had said, yes, they will take your repetitive job. It's like, yes, if you're moving one thing from here and you're moving it over here, yes, it would replace that. But there's skills that humans have that robots just can't compete with. Like your hand and your brain are actually extremely developed compared to what a robot is able to do. Like with your hand, you can do so many more functions than say a robot is able to do with its installed hand or whatever you'd want to call it. So it's like, sure, the repetitive small movements will be replaced, and driving humans shouldn't do in general for how risky they are. But humans have such a creative talent that robots don't, that I don't,
Right.
that I don't think that they could ever replace.
It's the technology and the touch
Yeah.
that together you really can make a great change. But I feel like we're never going to get away from that touch type feeling. And it goes back to the idea of when, you know, you're in the store, why do you choose one brand over another? And it's because somewhere they've touched your psyche, or maybe you saw a billboard or something, but there is always going to be that mix, I think. So I don't feel like we're all going to get taken over by our jobs are not all going to be taken over by robots.
No, well, that's good you agree. It's nice to know that I'm not going crazy on that piece.
No.
But yeah, so on the insurance side, you know, I've seen from the health insurance side, you know, there's dealing or working with some clients that have higher risk or lower risk, and some people are trying to bring CBD to get under the insurance umbrella, which I think is a very interesting thing to try and do, because, you know, you've seen THC been worked in as a medication. But do banks receive any of the money that goes through, like, I'm not sure if you're familiar with this side, but like on THC, the medication or the medical industry, you mentioned that banks make money from insurance, but would they make money from like a medical THC side?
No, so we are not involved in health insurance. It's just more so dealing with insuring pieces of property. So whether that be your house, your business, your car, or a sports stadium or something like that. So,
Okay.
yeah, with health insurance, we leave that to the big guns.
You don't touch that side of the game.
Yeah.
Yeah.
No,
Yeah.
no, we don't. But I think that it's fascinating because I personally am curious about what states like Oregon are going to do. I know you and I both have family out there, and they just passed some really interesting laws making things essentially no longer a crime, and making it okay to have harder drugs, access to harder drugs. So in my personal opinion, you can't talk out of both sides of your mouth. You can't say that people can do this, but then you can't cover things like THC or CBD or things that have proven to help things like epilepsy or PTSD. Like there's gonna have to be a reckoning at some point where people stop trying to speak out of both sides of their mouth.
Yeah. We've dealt a lot with that on the CBD side, and it sounds like over there as well. But it's like they let you do it, but they still kind of think you're illegal. Where it's very like you don't get all the benefits of the legal side. And so you're kind of stuck in this weird situation where like cannabis early on could only work in cash. And then you had all of these issues of people robbing the owners because they had all this cash on them, because the banks, it was too risky at the time or seen illegal, and so they couldn't take it. But then they created all these safety issues because now you've got an owner that has $200,000 in his car, and people know it, you know, because he has an entity, and people can look up who the owners of the entity are, and then they just find who that person is. So, but on the Oregon side, as far as the legalization, you know, with Lucas and my mom and brother up there, you know, I wasn't too familiar with what happened. I don't know if you were, but like, is it like, can you legally manufacture? Like, I mean, from what I heard, it's everything. Like you could make heroin, you could make mushrooms, you could make anything. Like, can you manufacture it, or like, is it just?
I don't know about the manufacturer side of things. I just saw it from the usage standpoint, or the end user.
Yeah.
If you were doing X, Y, and Z, there's no longer going to be penalties. And I'm sure that there's different like quantities. I'm sure there's lots of rules, but
yeah,
I thought that was fascinating.
it is. I mean, they've had mushrooms, I think, legal up there for a while. I think Colorado does too. But it's
Yeah.
I don't know. I think on some level of me, it's like, let them, if you're gonna do it, you're gonna do it anyway. So at least do it from like at least someone that can give you counseling or go in and talk to somebody. So I could see that side of it, but
Right.
it's a total change to the community up there. I think it'll be interesting to watch it. But yeah, so with your, let me see, from your lending side or underwriting, could you explain a bit more as far as the process of an underwriter, and if you give a company a loan and they're defaulting on the loan, or, you know, the whole path of a company comes in, you evaluate them, they get the loan, they go through the life of the loan, and they either default on it or it goes okay, and also maybe what interest rates you're seeing right now.
Okay, so that's a lot to unpack, but
Yeah.
Pretty much. So the institution I work for, we are a cash flow lender. So what that means is we really are going to look at the cash and not necessarily the collateral first.
Okay.
So the idea being, because some banks will be like, oh, we'll take your building and your building's worth X, we'll automatically give you, 80% of that. But we want to make sure that from a cash flow standpoint, all is good. And at the end of the day, we want business owners and entrepreneurs to have financial success and provide for their family. And so when it comes to a loan type of thing, typically want to see a cash flow coverage. So what that is Ebitda, which is earnings before interest, taxes, depreciation, and amortization. So basically, what you made in a whole year. So you want to see that number be at least 1.2 times of what your monthly debt payments would be. So for example, let's say you're netting about $12,000 a month. And this is like, you ideally would want to have no more than 10 grand in debt payments. But I mean, that still would be pretty razor thin. So typically you would want to see it a little higher, but that's kind of the minimum threshold. And then just when it comes to debt, the idea is that for a business, you would have at least, at the very minimum, at least 10% cash to whatever debt you're requesting. So let's say you're requesting like $100,000 line of credit to help you, let's say you get an order, and then obviously you have to pay your people to process the order. You have to run the equipment. You have to pay for the raw materials. And then you may not get paid by the mom and pop shop for 30 days after you deliver the product. So you have to cover the cost for, let's say, 45 days. So if you wanted like $100,000 line of credit, we would like to see typically about $10,000 in, cash on hand. And that's just kind of depends on the industry. Some industries may need less, some industries may need more, but those two items are kind of generally accepted threshold. So 1.2 times coverage, and then 10% cash to debt. And you talked about interest rates. I mean, that really is just going to vary by who you choose as your banking partner. So let's say that a lot of entrepreneurs may not be able to wait that 2 to 3 years to show sustained performance. So they may go out and get private equity or a debt out to just another private lender. That debt may be priced like 10, 12%, which is pretty high. But that is because typically the people that are going out to private lenders, they may not have that 2 to 3 years to say, hey, look, we did make money. We are a proven concept. So because it's a little riskier, you're typically going to pay more. From the banking side of things, I mean, interest rates are at an all-time low. So if it's, let's say properly secured by real estate, you're seeing 3 to 4% interest rates, or let's say it's that working capital line of credit that's kind of more just financed or supported by the cash flow, that may be like 5 to 6 to 7% interest rates. So banks are typically cheaper. However, for the entrepreneur, what that means is they typically have shown that they can make money. And as evidenced by, I mean, we've even seen big companies, like remember the WeWork thing where or just all these other companies, I mean, they are not cash flow positive for years, sometimes decades. And the people that, the way that they are able to go out and get debt or equity is either by doing a stock off, an IPO, or they go out and get really expensive debt, or they have to give up ownership. So sorry, that was a lot of info, but basically,
Keegs, you got a lot going on. You're quite intelligent with all this. I'll tell you that. I mean, if you've been doing it for 7 years, I hope you'd be good, but you're pretty good. So it's awesome to listen to you.
So banks are going to be pretty quote unquote cheap money when it comes to lending. But with that comes a bar that's set a little bit higher for companies to reach. So that's it in a nutshell. And so there's basically, you can find lenders anywhere. Anyone will give you money typically, but it depends on how much you want to pay in interest.
The interest. Yeah. So it sounds like the strategy would be maybe for an entrepreneur to come out and either bootstrap it for 2 to 3 years, or come out and get some private debt. And then once you're proven, go to a bank where you can get a bit better, a bit lower interest, a bit more stable, maybe some other functions that you guys provide as well. Because I know I just have like Bank of America, but I know whenever I would go in there, I was working for or doing the Entourage Effect at the time, and they would actually try and coach me up a little bit. They would, because if they do give me a loan or end up working together, at the end of the day, they want it to succeed, because I think it's a real pain for it not to. It's a lot more work when things don't go well than when everything works out.
Exactly. Yes.
So no, it's great to listen to you dive into this, Keegan. I'm not gonna lie, it is very interesting. I am trying to follow you slowly, but it's cool to
Well,
hear
I can go slow.
No, you're good.
I'm sorry if I'm speaking quickly.
No, you're good. I think in general, I would like to have you on more if you'd be, and we're gonna keep going for a bit, but I would like to have you on more just because the things you're talking about are so critical to the entrepreneurship path. And so many people think it's like this black box of unknowns, and you're a great person to be able to flesh it out and make it real and make things digestible versus oh my God, it's a bank. And when the bank
Right.
comes by, everyone straightens up, you know, as people start trying, you know, everyone's trying to clean everything up, make all the books look good, you know, and it's a very stressful time when banks come by, because it's a big moment for the company. But
Yeah, it is. But
so
at the end of the day, I mean, you really want to find someone, like I said earlier, that is that trusted advisor, and make a partnership, because oftentimes you're entering into a relationship that hopefully a business will last a long time, and hopefully you can find someone that can accompany you on that journey from being a startup to hopefully one day selling the business, and realizing that if that's what an entrepreneur wants to do. So it's an incredible thing when you can find people that follow your vision and care about your success.
I have heard about it a lot, and it was good and bad leverage. And you had mentioned leverage before, but I can't totally say I truly understand what it means. I know good leverage is
Okay.
better than bad leverage, but I can't totally tell you what like characterizes that.
Okay. So just in terms of leverage, the way banks look at it is, what is your debt? So let's say you have that $100,000 line of credit, and that's the numerator. And then the denominator would be your net worth. So that would be all of your assets minus your liabilities. So let's say the net worth of the company would be $300,000. So your leverage right there would be 1/3,
Yeah.
which is really lowly leveraged. And perhaps that company could take on a little bit more debt and be more leveraged, let's say maybe 1 to 2 times. So that would mean 300 to 600,000 in debt. And that debt could perhaps, let's say, allow the entrepreneur to buy an office, and instead of paying exorbitant rent each month, they're actually building equity in their business.
Yeah.
Or it could allow for the entrepreneur to buy that second manufacturing line and increase output, twofold. So those are the kind of examples of, I would say, quote unquote, good leverage. When you talk about bad leverage, so to speak, and it varies by industry, but the generally accepted leverage kind of maximum would be about 3 times. This is for a bank. So that would mean, let's go back to that, your business is worth $300,000. That would be about $900,000. So about $1 million in debt.
Wow.
And so that would be where you're kind of starting to push maybe a little too much.
So from
because the idea
1/3 all the way up to 3x is, like you said, 3x is the bad leverage point. So like,
it's not necessarily that it's bad, but it would be if you see a company that has 3 times leverage, 4 times leverage, and it keeps getting bigger and bigger year over year, then that means they're taking on debt, but the value of the company is not growing. So something is a disconnect there. And that could be, maybe they took on debt and they did R&D, research and development, on this new business line, and they had to scrap it because of certain reasons. Or it could be, and not to poke fun at you, but it could be like the owner decided that he needs 3 Teslas instead of 1 Tesla, and he decides,
that's very important,
just to
Keegan. One for every day of the week.
Exactly.
No.
So just making sure that the debt, and I know this is kind of your family's background too, is, think twice before you swipe your credit card. It's the same
Yeah.
thing with business debt. Think twice before you go out and spend, and, turn the lights off when you leave the room, watch the pennies type of thing.
Yeah. No, it's great to understand that, whenever I was younger, I always thought like any debt was bad debt. Like if I was always kind of taught to clear your credit card. You never want to
Yeah.
build up your credit cards. You always want to clear it. And me being not as well versed thought just brought that into anything. Like if I ever had debt of anything, I need to clear it and get rid of it as soon as possible. And
Yeah.
it was so interesting. I was watching a TED Talk or maybe a YouTube video, and someone was talking about leverage and didn't quite know what it was. And they were saying, like, if you have no debt, you're probably doing something wrong. Like some debt is like healthy. And
Yeah.
it's good to help your company grow, and you can have things that you could never normally afford and really grow your company. Now, there's the distinguish between good and bad leverage that was kind of puts it in between two brackets for me to kind of help, sure, I don't know if someone would give it to you, but if you had a company that was doing 100,000 in revenue and got 100 million, and what are you even going to do with it? It's not like
Right.
you can't even, you probably don't even have any infrastructure to successfully pay that off.
Right. Or a more direct example for the entrepreneur. So your passion and what you're good at and what is the CBD market space.
Yeah.
But let's say, for example, a liquor store came up for sale, and you're like, well, let me just go buy that. I want debt so that I can go do this.
Yeah.
And it's like maybe taking a pause and thinking, well, do I know that industry as well as I know my own? And so a lot of times I have seen entrepreneurs who are so brilliant, so creative, but it's like they want to have their hand in every different honeypot instead of just fully focusing on and growing, the one that they know the most about.
Mm-hmm.
So that can be another example of, like, quote unquote bad use of debt is thinking that because you're good at one thing, you need to take debt out to go be good at another thing.
They're a Swiss Army knife, Keegs. They can do
Yes,
anything.
yes.
They did
They
one thing
can.
good, and now it's everything. No, that's
Yes.
a good point to kind of put it in the frame of, what are you even good at? What are your true skills? Because maybe that could be good leverage for someone that has experience in the industry, but you don't,
Yeah.
So we'll wrap it up in just a minute, but do you have any kind of, if you had an entrepreneur that you were talking to, that they were trying to start a company or trying to work with a bank, any suggestion or kind of last thing that you'd like to leave with them?
Well, first, I would be remiss if I didn't say this. I have the easiest job in the world. I get to basically armchair quarterback and listen to people and listen to their business. The hardest job in the world is what entrepreneurs do, and it's very risky and I'm sure at times scary, but it's so beautiful to watch, and I'm so happy that I get to help support entrepreneurs. When it comes to, I guess, any sort of advice, it would just be pretty kind of on a personal note. It's maybe a little coming out of left field, but making sure that you and your family are buckled in. So does that mean that, we're going to go start this business, and that means we're going to have to pack our lunch for the next, 3 years and not go out to eat once?
Mm-hmm.
Or is that still important, to you and your family to have a certain lifestyle, and just making sure that you don't get too tunnel visioned, because there is still more to life than just business, and it can be kind of disheartening sometimes to see entrepreneurs not be really thoughtful about those boundaries on the front end, because if you let it, it will take over your whole life, and it is like a baby.
Yeah.
And so you just want to make sure that the whole family is ready to bring this new baby into the world.
No, that's a
So
very powerful,
those are kind of
real,
my good comments.
that's a very powerful, real message. I think some people think everything is, the grass is greener. We're going to go out there and put all of our work into it and everything we got, and we'll come out with something in our hand. And, it can, if you're not willing to on the family side, it can create some issues.
Yeah.
But no, it's been great having you on here, Keegan. We practically grew up together, so it's always great to talk to you again. But I would like to have you on a bit later, in a month or two or however long. And I was honestly trying to unpack some of the things you were talking about, so maybe I need to do some of my own research so I can add some more value. But no, it's been awesome having you, Keegan, and I hope you have a good day.
You too. Thank you, Alex.
Thanks, Keith.